Hello, my name is Harshita Kaushik, and today we'll be navigating the world of VC funding. Venture capital, that is VC, firms are pivotal in fueling the growth of startups by providing capital in exchange for equity. These firms specialize in identifying promising early stage companies with high growth potential, offering not just financial support but also valuable expertise and industry connections. Venture capitals usually play a crucial role in supporting entrepreneurial ventures by providing the necessary capital, expertise, and resources to help them grow, succeed, and potentially become significant players in their respective industries. Venture capitals generally take on higher risk compared to traditional lenders or investors as they invest in early stage companies. So basically how VCs operate, so we'll see a step-by-step process over here. First, they go through the sourcing and screening process, which actively seek investment opportunities through referrals, networks, or research screening. Then due diligence, which where they analyze the business, financial market, and all that. Then we go to the term negotiation, where they negotiate investment amount, valuation, ownership stake, and all that. Then we go to the investment and support, where they provide funding along with strategic guidance and mentorship. Then the key factors for the which basically venture capitals look for in startups are the investment focus, strong management team, market potential, and unique value proposition. Now, the venture capital evaluation is based on traction, business model, and exit strategy. So, the traction is basically the metrics such as customer acquisition, revenue growth, and user engagement, and all that. The business model is basically the clear revenue streams, pricing, potential, and profitability. The exit strategy is the potential for acquisition or IPO to generate significant returns. The next one we have the trends in India before 2021. So before 2021, the top VC firms contributed around 32% of total deals, where Indian startups secured over $12.1 billion dollars in the first half of 2021. Then during 2021, Indian startups raised over $42 billion, dollars, which is three times increase from the previous year. So basically, venture capital's investments reach around $14.4 billion dollars in the third quarter. Now, during 2022, India accounted for around 5% of global venture capital funding and 20% in the Asia Pacific region, where India surpassed around 100 unicorns in May. So the here we can see the venture capital funding landscape in India during the 2022. So the funding compensation is here. Then we have the mega round decline. Then we have early stage rounds, and we have the capital development deployment. So in basically the in funding compression, it was the total deal value decline from it was a decline from 2021 to 2022. Then we have the mega round decline where the number of deals valued from $100 million to decreased to 92 to 48. Then we have marginal growth in early stage rounds, which is the early stage rounds. Then we have GPs and remain cautious in deploying capital, seeking quality assets in the capital deployment. Then we have shaping India's funding landscape, that is the fundamental shift. So first we have the investors who shift from rapid growth to sustainable unit economies. Then we have the regulators who tighten the guidelines for fintech companies. Then we have the macro highlights which help rising inflation and expensive capital. Then we have the startups which have layoffs, deferred IPOs, and distress M&A. So the key takeaways from VC funding we take is the cautious capital. So the investors prioritize sustainable unit economies over rapid growth. Then we have the emerging sectors where green shoots of growth in electrical vehicles, agri-tech, and deep tech. Now we have the tier 2 hubs where the emerging startup hub and beyond metropolitan areas are attracting funding. So this is it. Thank you so much.